Welcome back to another Your Average Investor video. Thank you for tuning in, and today we're going to talk about some interesting option plays that you could look at for AMC and GME depending on your risk tolerance in your own portfolio. As always, this is not investment advice. Do your own research, make your own decisions, but we're going to show you some things we're interested in. Please hit that subscribe button if you haven't already. There's a lot to help support this channel and keep it going. If you need to know what happened with GameStop and AMC, check out our last video to get the update there and why they're starting to surge. And in this video, we're just going to go over the option plays. So here's what we're looking at with AMC. And after hours trading, AMC is around $6.50. I'm assuming it's going to open at that price tomorrow. Now, if you look, let's just look historically at some price levels real quick, right? Obviously, all of this was from the original meme stock craze. I'm going to zoom in here to everything since this stock split right here. So here's the stock split. These are some interesting levels to me. One we've already passed, and it's this massive base around $4. The reason this is interesting is because anybody that was short AMC at $4 a share is now underwater if they haven't covered already. The next interesting level is right here, which we're approaching right now in after hours trading at about $6.7 per share, because this is another base that people who went short are now going to have to cover on. And then the next interesting level is here, right at $8 per share. These would be levels that I'm going to watch, because if the price breaks above $6.50, well, I would say $7 a share, very likely all of these, if any of these shorts are still short, they're going to have to cover, pushing the price above 8, forcing these shorts to also cover. Now, if we rewind a little bit from there, there's quite a bit of space between this $8 level and the next big levels where people were trading AMC. So if you look at this, right, so but after 8, we've got a little bit of a base here in like the 11 range before just a few massive cascading down days. And the next big level I'd be looking at if AMC comes up is this $40 level. This $40, let's zoom back out. I'm going to zoom in, excluding those days. This $40 level, if you look at this, this was the previous support zone. This was actually $4 per share before that stock split, but it's $40 now. This zone, if it breaks above this, I would not be surprised to see another rally. I'd be surprised to see it at $700 a share. I would not be surprised to see a rally popping this above $100 a share in a massive short squeeze event. Now, if you look at FinViz, we're going to pull up FinViz real quick here. By the way, if you don't know, this is Keith Gill, aka Roaring Kitty, one of the original GameStop, one of the original people who brought GameStop to the attention of the retail world, retail investor world. But look at this. So short float reported. I know people are going to say there's naked shorts, there's invisible shorts, there's all these things that are unreported. But let's just look at reported, because it's what we can see right here. At about 19%. The reported short float is about 19%. And we could probably, I think there, let's see, latest short interest. We could probably verify this with, I think there's a site called like shortsqueeze.com or something. But let's just look at another site, right? So let's look at another one. We're going to see if we can find AMC on this list. No, I do not want to subscribe. But I do want to see AMC if he's on that. Oh, he's not on that list. Unless I just scrolled past it too fast. Let's see if we can find another one. Short NASDAQtrader.com, short interest. Here we go. AMC. Let's get this verified. Does it need to be capital? Maybe it's case sensitive. Not. Wow. These sites. How are these the top 2 sites? How is this the second top site in Google search results? Let's see. Highest short interest stocks. There it is. highshortinterest.com. That's the one. That's the one I was looking for. So we want to see if we can find AMC on this list. And it doesn't look like AMC is on that list. That's kind of interesting to me. So all of these, right, short interest, 86%, 50%, blah, 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 down. AMC doesn't even make this list at the current reported short interest. So in my mind, this is where the short squeeze gets interesting. Today, look at the volume. Over 500 million shares bought and sold and traded today. Look at the volume prior to that, 20 million. So we're up by a factor of about 25 on volume alone. If you look back here in the original, like look at the difference in this candle, right? 500 versus 73. Now, I'm actually not sure if when they do a reverse stock split, I know obviously they retroactively show the price differences, but I don't know if the volume gets changed, right? So, for example, should this volume be 10 times higher, or is it at an appropriate level? Because if they didn't, so if they adjusted the price based on the short split but not the volume, then this would actually be closer to 600 million shares, and then it would be indicative of this same magnitude of volume here. So I'm thinking that might be what happened, but I'm not 100% sure. These price levels, though, that's what's the most interesting. Right now, it seems like there's some pretty good asymmetric risk, if you're looking at this from a trading perspective, to get in on a little dip buy and see if we ride up to this $7 and then $8 per share for a little pop to 10. Beyond 10, I think it would be tough to watch it go from 10 to 40 unless we get a lot of people shorting it in this 6 to 10 range, and then people continue to buy at 10, and eventually, again, the shorts have to cover, pops it up again, more people short and get trapped over and over. That's exactly what we saw happen back here, right? There was this initial pop, a lot of people went short, but retail investors kept on buying, and then eventually squoze these guys out, massive pop, and this likely would have gone higher, both on AMC and GME, had they not shut off the buy button on Robinhood, and almost every other trading platform. They let you sell, but they didn't let you buy. That's enough of this, though. Let's get into those options positions I promised you. I want to show you what I'm looking at because of that. So we're going back to AMC. I told you about those price levels. This is what I'm looking at. I want to find something about 40 days out. In this case, we've got June 21. And the reason I want it about 40 days out is if you look at this initial chart, there's this big waiting period behind it. This is actually way more than 40 days. However, information travels at the freaking speed of light, and I think that this meme is going to blow up even harder than it did last time. So I want to give myself some time, right? So if there's a big pop, a little bit of a lull, and then a second pop, I want to be ready for that second pop. So I'm giving myself time, about 40 days. The second thing I want to do is I want to mitigate my risk, which will also cap my upside. So one option here is you could just go ahead and buy calls, right? Call 123. It's going to cost you $123 for a call set. This will be probably closer to $200 tomorrow. But $200 for a call 7, and that's going to take, if you buy that, AMC is going to have to trade at least $9 per share by expiration just for you to break even. There's a better way to do this, in my opinion, and that would be buy the call 7 and sell the call 8. Or if you want a little more risk, a little more upside, buy the call 7, sell the call 9. Now here's why this gets so interesting. Is if I just buy the call 7, then to break even, AMC has to be trading at $9 or above by expiration. If I want to get a 100% gain, that means it has to be trading at $11. 200% 13, 300% 15, and on and on. So 300% gain. If I wanted a 300% gain on this position, AMC would have to go up another over 100% from where it is now, 6.5, a little less than 6.5 now, up to 15. But if I do this, if I buy the call 7 and I sell the call 8, what I've done is I've limited my risk to $13 instead of $123. I've also limited my upside. And again, I'm going to say this is probably closer to $200 at open tomorrow. This will probably be closer to 20. So I've limited my upside to an $80 profit per contract. So I'm going to assume that this is going to cost $20 at market open tomorrow. And the way to think about it is this, right? If I buy this call 7 and I sell this call 8 and AMC is trading at $10 a share, I have to sell all of my shares at $8 a share, but I get to buy them at 7. So that's going to be $100 per contract minus whatever I pay for it. I'm going to assume I'll be paying $20, which means I get an $80 profit per contract, or I 4x my money, which is a better return than buying these calls and having no protection and no limited upside, right? So I could have unlimited upside here, but then again, just to get 300% return, I've got to get all the way up to $15 per share. I like that a lot more, where I just have to get, if AMC is trading at $8 a share by expiration, then I make full profit. Now, again, I could get a little bit spicier here. I could say I want to go here instead, where I'm going to buy the 7s and sell the 9s. And this will probably cost $25 tomorrow. But what it does is it opens my upside potential because I've got $2 between the strike prices. So instead of a maximum of $100 per lot, I'd get $200 minus what I paid, which is about 25 bucks. And I would have a maximum profit per contract of $175. Now again, like let's just say instead of buying this at $200, I'm going to spend $200 on this spread. And again, assume it's going to be $25 at open. Well, then I'm going to buy 8 of these, right? So I'm going to buy 8 legs. It'll cost me roughly $200. And again, I've got a max profit of $175 times 8, $1,400 profit on a $200 position. That's one way I'm looking at playing this tomorrow. Again, not financial advice. Do your own research. Do your own thing. The other thing I'm looking at is possibly selling some puts. But I don't want to sell puts that are a month out, though that may be interesting because that gives way too much time for, especially in the history of AMC, for Mr. Aaron to come back and say, hey, we're going to sell some shares now that the price has popped and raised some cash. He's historically done that on past pops of AMC. He's seen that as an opportunity to sell some shares and raise some cash because they need cash right now to continue operations. They're operating at a loss. So if he does that, I could see this moving down rapidly while GameStop maintains its gains. So for that reason, I'm looking at something like this, like 4 days out. What if I sell these puts with a strike of 4? And I'd be okay buying, I'd actually be okay potentially buying some AMC at that price. But the reason I'd be doing that is these puts, their implied volatility is extremely juiced right now because AMC is going wild. So these puts are interesting to me for that reason. And there's only 4 days till expiration. And so if by chance in the next 4 days, the price drops 100% back down to 50% back down to $3.5-ish a share, 3.75, then I actually break even here. If it goes down to 3.75, I break even because I'm getting almost 25 bucks for this put right here. So I lose a little bit of money. Or I could sell again this put 4.5 for about 50 bucks. Maybe I do a put 5 for a little bit more, something like that. So that's interesting to me. That's one way I'm looking at playing this, is selling some puts, again, with enough cash reserve that I could cover the put if exercised. And then if I was exercised, I'd probably just turn around and sell some covered calls on the position. GameStop, similar story. So let's look at GameStop here. We're going to start with the chart of GameStop. It's quite different than AMC because it hasn't had, instead of having a reverse stock split, they actually did a traditional stock split and have held a pretty healthy base here around this $15 mark, maybe $15, $16 for the last couple years that has continued to pop off of before moving down. And if you look back where we are now, so now we're sitting at $36, $37 a share. So we're going to put a few price lines on. Look at this, right? So let's go back to here. There's about $37 a share. Anybody that shorted from this time forward and hasn't covered yet is now underwater, and they're looking at their position going, crap, we're losing money now. And they're going to have to buy those shares back if they don't want to lose even more money under the fears that GameStop goes up, right? And that's a long time to be shorting and hoping the company goes down. Everybody that's shorted here, of course, is very underwater. They've had to cover, or they're at over 100% losses. And you look at this because this used to be all of 2021. This served as a support zone. So look at this. Massive, crazy price action here. Bounce from here, back up. Steady again, back up. Almost 100% gain here. Bounce again, back up. And then there it finally broke under and recovered one time before breaking under, oh, 2 times before breaking under for good. So this is interesting to me, right? We're already at this price level. So what I'm going to be doing tomorrow is I'm going to watch where GameStop opens. And I'm going to look for something like this, right? So here's GameStop today. It opened and after a tiny little sell-off, just absolutely rocketed before a pullback. And then after this pullback, it kind of based for the rest of the day and then mooned up in after hours trading again. I would like to see some sort of pullback tomorrow. I'm not convinced it's going to happen, but I would like to see a pullback. And on that pullback, I'll likely be looking for a similar position where I look about 30 days out. You can see right there, there's my covered call that I sold. And I would be buying calls and selling calls at the same time, right? So in this case, if I were to have entered this position at market close, it would have cost me about $50 and it would have had a max potential profit of $250. 5x return, pretty dang good. And I'm only risking 40 bucks, 50 bucks, and GameStop, in order for me to get max profit here, GameStop would just have to trade at $40 a share or above. And that's what I love about that position is, again, if you look back historically here, $40, oops, let me get this one back maximized. There we go. $40 was a support zone. So I think there's a pretty interesting case to be made that GameStop hovers here at 40 bucks and starts bouncing up off of $40 a share again while we go into this next meme stock mania phase. Now, I'm not going to say that this is the best trade or it's going to make you the most money, because if you would have, as an example, if you would have seen GameStop moving up like this and a few days ago been like, I'm just going to buy some YOLO calls way out of the money, let me just show you what would have happened if you did that. And it would have been nuts. So let's say you saw it moving up to 15 and you bought some YOLO calls that are going to expire this weekend at like $25 a share. 25 strike price. So we're going to send this to yellow. And let me show you what would have happened there. So let's say, again, you bought these like around this time frame here. You would have been buying these at about $100 per contract. And today, at the maximum, you would have had a $1,500 per contract. So 15x, over a 10 bagger there. And by the end of the day, about an 8 bagger. So that would have been an absolutely phenomenal play. Lots of risk there, right? You're fully exposing yourself to theta decay and not giving yourself a ton of time till expiration. If you went even further out of the money at, like, say, call 30s, it gets even crazier, right? 35 bucks back here, almost $1,500 here. I don't know if they had any call 35s available or not. Looks like they didn't until today. So $30 would have been about the highest strike you could have gone. Interesting plays. You know how we're playing it. I'd love to hear how you're playing it. Are you just YOLOing everything on out of the money calls? Are you playing some spreads? Are you looking to collect premium while this IV spike happens? Let us know in the comments below. We'll catch you next time.